Good day, everyone. You are welcome to this week's Business and Investment Tips program, a production of Christ Church Radio. My name is Ayodeji Ebo, an investment professional. This week, the attention is on the federal government's budget performance as of August 2021. Following up on our analysis last week on the proposed 2022 budget presented to the National Assembly, we thought we should also look at the federal government's 2021 budget performance as of August 2021. This is premised on the fact that past and current performances will provide insight for the 2022 budget implementation. The federal government achieved a total revenue of 3.9 trillion naira in the first 8 months of 2021 relative to the prorated revenue target of 5.4 trillion naira as of August 2021. Translating to a 27.3% underperformance. A further breakdown shows that oil revenue underperformed by 44% with 754 billion naira collected compared to a prorated revenue of 1.3 trillion naira as at August 2021. We attribute this underperformance mainly to subsidy payments, which according to NNPC was 715 billion naira as at August 2021. If we account for federal government share of this at 377 billion naira, revenue underperformance would drop only to 13%. The better than expected performance in oil price and exchange rate more than compensated for the weakness in oil production. While oil production was 16% weaker than the assumption of 1.86 million barrels per day due to maintenance and operational issues, oil price and the exchange rate were 62.5% and 8.2% better than assumed. On the other hand, non-oil revenue came in impressive at 15% over the prorated revenue performance of 992 billion naira as of August 2021. The positive outing can be linked to the strong improvement in value-added tax and company income tax within the period. VAT and CIT surpassed revenue targets by 48% and 21% respectively relative to the prorated targets. VAT collection improved due to the rise in VAT rate last year from 5% to 7.5%, while both VAT and CIT increased due to the improvement in business activities following the restrictions caused by COVID-19. In addition, revenue from independent sources, that is, revenue from ministry, departments, and agencies, sustained its year-on-year growth to record 98% achievement within the period under review. On the expenditure side, which captures the spending of the federal government and measures budget implementation, the government spent 8.1 trillion naira, which is 84% in the first 8 months of 2021 relative to the prorated target expenditure of 9.7 trillion naira. The recurrent non-debt expenditure, spending excluding capital and debt servicing, gulped 3.2 trillion naira, that is 38% of the total expenditure and 81% of actual revenue. Debt service, which surpassed the target by 29%, accounted for 35% of total expenditure and 73% of actual revenue. This implies that out of every 1 naira revenue the federal government collected, 73% was used to service debt. Capital expenditure, which is what most Nigerians benefit from, received the least allocation, that is about 22% of total expenditure within the period under review, with a disbursement of 1.8 trillion naira, 47% below the expected 3.3 trillion naira. Capital projects are critical to the development and growth of any economy, hence should receive the most attention. The actual budget deficit stood at 4.6 trillion naira as of August 2021, which were funded with new borrowings of 4.6 trillion naira, including funding from the CBN. Based on this performance and assuming the government keeps up with the same pace, we project a total revenue of 5.9 trillion naira versus budget of 8.1 trillion naira and a total expenditure of 12.2 trillion naira versus budget of 14.6 trillion naira in 2021. translating to a budget deficit of 6.3 trillion naira, which is in line with the projected deficit of 6.4 trillion naira. Comparing this with the projected revenue of 10.1 trillion naira and projected expenditure of 16.4 trillion naira in the proposed budget of 2022, we think the deficit assumptions of 6.3 trillion naira is too conservative. The numbers suggest that the 2022 budget implementation will suffer and the actual budget deficit may reach 8 trillion, which means more borrowings and support from the CBN. As a result, we suggest you invest more in short-term dated instruments like 3 to 6 month treasury bills in the fixed income market to enjoy the expected increase in interest rate in 2021. Thank you for listening. Please join us same time next week for another interesting and insightful session. For comments and feedback, kindly forward to ccradio@rccgchristchurch.org or send SMS to 07082463747. Stay blessed.